I'm Tyler Lawton, the Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. It is Friday, November 14th, and we are approaching 10:20 a.m. Eastern Time. As you can see, chart of the S&P 500 here, down about half a percentage point, definitely better than where it opened, so that's encouraging. Let's back up to yesterday for a sec. So first, stocks were down yesterday. Pretty horrible day, ended just off the worst levels. Worst day in months. AI sentiment continues to be pretty shaky, and expectations for a Fed rate cut in December are also fading. One of the, I guess, kind of bright spots, the equal weight S&P 500 was doing slightly better than the cap weighted index. We were on pace for a weekly gain, but again, given this morning's weakness, it seems kind of more likely than not that all the major market indices are going to close with weekly declines. But again, who knows? Things are looking up now, much better than they were about 45 minutes ago. Let's go over to the macro for a minute. So the government shutdown ended on day 43. Trump signed the spending bill into law on Wednesday night. So that package is going to fund the government through January. Provisions to restore SNAP benefits, provide retroactive pay for furloughed federal workers. The downside is that it sets up another possible shutdown in January because there's going to be a lot of debate about discretionary spending and healthcare costs and all of that stuff. So at least we get a little bit of a reprieve through the holidays. The data vacuum continues to be an issue, though. We have this Fed meeting coming up on December 10th, and the White House said on Wednesday that the October jobs report, the CPI report, that data is unlikely ever to be released. So what are Fed members going to do without that? Of course, they have access to all kinds of data. But without those reports, there is some debate on whether or not the Fed is going to have the information that it really wants to get the cut that we were all hoping, which now is kind of up in the air. I'll talk more about that in just a second. One quick note about this morning. There is some better news regarding trade and tariffs. The White House is set to eliminate tariffs on some food items, trying to reduce the cost of living. So bananas, coffee, beef, some things like that. So potential good news. Okay, back to the Fed. So there were a lot of Fed speakers this week, and pretty much everything leaned more toward the hawkish side of things. So that helped to push down the December rate cut expectations. They were at 54% this morning. I just checked the CME's FedWatch tool at 9:30. That is the lowest it's been in a while. However, if we look out through the end of next year, so a year from now, it still looks as though we're projecting three 25 basis point cuts throughout the end of next year. So maybe it's just delayed. We'll have to see. But again, we just don't know now with the data vacuum what's going to happen on December 10th. So it's going to be interesting. Also interesting, Black Friday is coming up in a couple of weeks. Saw a note this morning that companies might be pulling back on their Black Friday promotions due to tariffs. They just don't have as much wiggle room on margins. So it might not be worth waiting for Black Friday deals. Hopefully that's not bad news. All right, equity prices for the week. Like I was saying, not a lot in the green. It seems like the major market indices are going to be down for the week. A couple of areas that were doing okay: healthcare, pharma, and biotech, especially. We saw some M&A activity in packaging. SEE was the ticker symbol there, and then Cisco had a decent report. So some of the networking stocks are doing okay. Also some relief in some of the food and beverage names and some pockets of energy. But really the big picture for the week continues to be kind of similar to last week. Momentum unwinding. There's not really a huge specific factor that we can point to other than, the uncertainty around Fed cuts. Are we spending too much on AI? All those things. There's a little bit of debate also on retail participation, which has been retail investor participation buying the dip, was relatively strong, but apparently some of the data is showing that hedge funds are unloading a number of stocks, and maybe retail investors are starting to pause on their buying. So anyway, a lot of moving parts. Moving over to small caps, the area that I focus on most of the time. So small caps continuing to underperform here in 2025, but I do think the stage is set for a solid small cap performance next year. If we just look at the earnings expectations, and of course, earnings are one of the biggest drivers of stock price performance, right? So S&P 600 earnings expected to grow by about 8.8% this year, and then around 20% in 2026. That would put earnings in that index at a record high of $8.10. In contrast, earnings in the S&P 500 should be up by about 11% this year, then 13.5% next year. So pretty solid growth, but if small caps can grow 7 percentage points faster than large caps, one would think that there's some area for small caps to, if not outperform, at least kind of get out of this multi-year funk that they've been in. The cheap valuations in small caps is continuing to drive a lot of M&A activity. Bank of America was out this week talking about some areas where we've seen record M&A activity. Deal flow is strongest in healthcare, especially biotech, and also decent volume in financials and software. Those stocks continue to be kind of beaten down, though. That's the bad news. I think that companies that are larger that can issue equity or use their stock as a way to snap up relatively inexpensive small caps, that's a pretty good trade. And investors should probably take note of that. I think once that large valuation discrepancy starts to evaporate, M&A activity in small caps will likely slow down. Honestly, that's probably a good thing because when M&A activity is lower, small cap stocks are usually, they're not trading at such a discount. So for the next week or so, obviously a bit of a touch and go market right here. It's been kind of a weak week. I would probably be focused more on, building a watch list, not doing a lot of buying. What I've been doing mostly is just going through companies that I'm following, building my watch list on stocks that have acted well since reporting. It's really pretty simple. So that's what I've done today. I've got around a dozen stocks for you. I'm not going to go deep into what the companies do or what their results are like. That would take much too long. But I did want to put a whole bunch of ideas in front of you, kind of as a place to start maybe deeper research. Before we do that, just a quick look at the other major market indices. As you can see here, the NASDAQ now, oh great, up. We were down over 1%, but now only down about 0.2% on the day. And the S&P 600 small cap index is coming off of its lows from the morning as well, about down 0.7%. Not a huge story here, and yields kind of bouncing around. Of course, there is more to that story if you want to dig deep, but we're gonna leave that alone for now. So first company, Assembly Biosciences. So this is a micro cap. Market cap here is about 270 million. Ticker symbol is ASMB, and they develop small molecule drugs to treat hepatitis B and C. I should point out that if you're interested in looking at some of the fundamentals on these companies in this video, you can pause it, and down at the bottom you'll see from left to right quarterly results and growth rates, and just take a minute to kind of study it. But it's earnings, then sales, and then pre-tax margin, and you'll find all of that information at the bottom of the screen. All right, next up is Phibro Animal Health. Ticker symbol here is PAHC, and market cap is 1.8 billion. As you can see, the stock continues to act well above most of its major, or all of its major moving average lines, and earnings was, November 5th. Then we have Aurinia Pharmaceuticals, 2 billion market cap. Clearly in like the sweet spot pharma, like I was saying earlier, a lot of M&A activity here, and the stock is acting very, very well. Artivion, ticker symbol is AORT. It's a medical device company. They make a number of implantable tissues for cardiovascular and vascular repairs. Good earnings report. They have some new products that may be approved next year, and I think that's where some of the excitement is around, and that is Artivion. Warrior Met Coal. For those coal lovers out there, this is a company that makes coal for steel, not for energy production. Market cap of 4.2 billion. They had a good earnings report. The coal, obviously, coal is not something that a lot of people love, but it is something that the Trump administration is in favor of getting going again in the U.S. And this company, prices are down generally for coal, but they have a low-cost new project coming on that's set to help them quite a bit. So kind of an operational story there, operational improvement story. So that's Warrior Met. Vita COCO, ticker symbol is COCO. I mentioned earlier that some of the beverage companies did okay for the past week. So Vita COCO makes coconut oil and milk, energy drinks, protein infused water, things like that. The stock, as you can see, spiked after reporting earnings, calmed down a little bit, but is still above its major moving average lines. ALPH Holdings, ticker symbol just under 3 billion, another medtech company here, and they make implants, spinal implants, so screws, all kinds of things. I checked out their website. I've looked into this company a number of times before, and it's just kind of crazy what they make and what what people have in their bodies. But that's ALPH. OWLT, ticker symbol OWLT, just reported yesterday, and the stock is up more than 11% today. Market cap here of 300 million, so another micro cap. They offer health tracking devices for monitoring a child's heart rate, oxygen level, and sleep, all in real time. CELC, ticker symbol CELC, 3.8 billion market cap. You can see that obviously there's a major gap up here back in July, and then another one here in October, and then the earnings report at the beginning of the week, and the stock continues to do well since then. So obviously some interesting things going on with CELC. Not going to go into details, but would suggest looking at those dates and the press releases around those to see exactly what was going on. A energy name here is National Energy. Ticker symbol is NESR, and market cap is 1.4 billion. Oilfield services company providing services outside of the U.S., mostly in the Middle East, North Africa, and APAC region. Just reported yesterday, and the stock was up going into that, and then also today. And last but not least here is Xometry. Ticker symbol is XMTR, a 3 billion market cap company. It's kind of benefiting from a reshoring effort of manufacturing in the United States. They have a marketplace that allows manufacturers and suppliers to work together to get the parts that the manufacturers need. And it's kind of like a supply chain resiliency, like I said, onshoring thing. Kind of an interesting story. It's, I think, like big picture, kind of like the Amazon of manufacturing parts. So that's Xometry. All right, I'm going to cut myself off there, guys. I hope you have a nice weekend, and we will be back in touch next Friday. Take care.